Thanks everybody for joining tonight. We're going to wait just a couple of more seconds here and let everybody join. Wanted to appreciate you guys jumping on and learning about our income fund update. Wanted to start by saying thank you for those that have invested in the income fund and those that are jumping on to hear the update. If you haven't invested, welcome. Our income fund launched earlier this year and has raised a tremendous amount of cash and has been finding some great investment opportunities. And as people jump on here, I just wanted to say, if you have any questions about the investment opportunity as we go through our webinar tonight, we're here to answer them live in the chat. And also, I'll take a few questions at the end. But if you need any questions answered, you can always email me at ryan@spartan-investors.com. So ryan@spartan-investors.com. And we'll go through any questions that you have. Again, feel free to put them in the chat or the Q&A. And I'll do my best to answer them as we go through the deck tonight. So welcome everybody. Thank you for joining us on the Income Fund webinar. I'd like to start off by saying we're not offering tax, legal, or investment advice. Do your own due diligence, consult your legal and tax team, and this is just a general overview of the investments in the Income Fund. So the Income Fund is currently distributing 4% to our investors. We do monthly distributions of the Income Fund. If you do invest, it takes 90 days for your funds to go active. We're going to talk about the two deals that we're buying in the Income Fund tonight, and we plan to add additional Income Fund properties throughout the remainder of this year and into next. These are our target investment returns in the Income Fund, still hitting a 14 to 20% annualized return, meaning that every year when you combine the cash flow and the sales profit, you'll get to a 20%, 14 to 20% annualized. We're targeting a 5-year hold, 4 to 8% cash flow throughout the hold period, which basically means double your money in 5 years. And our cash flow projections in the Income Fund are as follows: 4 to 5% in year 1, accelerating to as high as 8% in year 5. And the distributions are sent every single month. But what I wanted to focus on tonight was the actual properties that are in the Income Fund. We have a unique ability to buy yet another property in Tyler, Texas, and Spartan loves this market. Specifically, we have an exit upcoming on a property that we bought in Tyler only a couple of years ago for around a $2 to a $2.5 million basis. Very similar in asset quality to this facility, and we're selling it for $8.5 million today. Now, that doesn't mean that this property is going to sell for that much, but what I'm saying is that we're very familiar with the Tyler, Texas market. We're actually the largest operator in that market, and we have boots on the ground there. So the facility in Tyler, Texas that was brought to us uniquely positioned Spartan to be the best person to operate it, the best group to operate it, because this facility is actually kind of small, only 28,290 square feet. However, we have properties that surround this facility, and we can more efficiently manage this property because of our payroll, etc. It has some climate-controlled storage, which we love, about 325 units, and about 309 of those are climate-controlled, and then there's some parking spots. Climate-controlled units in Texas especially are in high demand, which is what we love about this facility. But let's talk about our economies of scale. So you can see the white drop pin on the screen. That is the property that we're going to buy. And then the 5 drop pins around it are the facilities that we own in Tyler, Texas already. And we're familiar with Texas having 30 properties in the state alone. A lot in the DFW area and a lot in the Eastern Texas region, with one in the Houston area too, north of Houston in Huntsville. So we love the economies of scale. This gives us marketing efficiency. It gives us payroll efficiency. And it allows us to have boots on the ground in a market that we're already familiar in. And this allows us to reduce our expenses, and it makes the returns better to investors. So the Income Fund is going to purchase this property. And what we also like is that the population growth within 5 miles of the drive time of this facility are nearly double the national average. And there's the stats there. You can see the population growth of Tyler projecting growth from 120,000 people to 134,000 people in 2023. So a tremendous growth rate. We like this market. It has technology, healthcare, manufacturing, and it's just east of the booming DFW Metroplex, which is a phenomenal market. We like the population growth, and we love everything about this market where we have multiple facilities already. But here's another, I think, the best part. we have built-in equity. So our appraisal came in at 23% above what we're paying for it. It came in at $3.5 million and we're paying 2.85. So investors are getting day one equity. And I think that is one of the strongest reasons why we really like this deal, is because we're getting built-in equity. We're selling properties in this market, again, north of 8. And so we know that this facility is undervalued for what we're paying for it, which is amazing. And that means that the investors are going to get some built-in equity. The second part that we like about this is that we're buying this at an 8% cap rate. And for those that are familiar with some of the recent dispositions that we've had, we've been selling properties for a 3.8% cap rate to a 5.5% cap rate with similar quality to this facility, or even lower quality than this property. So to suggest that the appraisal came in higher and we're buying at a great cap rate, that gives you two things. It gives you built-in equity and it gives you cash flow, project level cash flow day one in the income fund. It's a perfect property for the income fund. Rents are also currently 10% lower than the market rate. And these are some of our competitors that have surrounded the site. We do a market study on all those. And then we also have additional room to expand the facility in the back. And so Spartan, typical deal, this is like a vanilla ice cream cone for us. It's right down the fairway. It's a property that we come in, we have about $500,000 of improvements to make. We fix it up, we paint it, we do the drive aisles, we do the cameras, we secure and well position the property to be one of the nicer properties in the area. We put our sophisticated operations in place. And this property in particular has vacant room to expand. And if we expanded and build additional units, that would be more upside to you as the investor, but we haven't put that into our underwriting file as we wanted to be conservative. This is our sources and uses page. You can see that we've taken on less than 65% leverage on a $2.8 million purchase price. And we're planning to have some improvement cost of about $505,000 at about $18 a foot. And our break-even occupancy is a very healthy 59%. The facility, I believe, is about 80% occupied, and we believe that we can bring that occupancy up as high as 91%. We're assuming a 6.35% exit cap rate assumption. Again, we think this property is undervalued, and we're getting it at a great discount, which is fantastic. And this is our plan for debt. We've underwritten this into the underwriting, 8% fixed rate debt, 25-year amortization period, in less than 65% leverage. So really like this opportunity and really proud to put this in the income fund. And we're looking to close on this asset as soon as next week, I believe, or towards the end of September. So if you're looking to get more money into the income fund, if you've already paid or if you're already invested, and if you are new to Spartan and you want to give this a whirl, this is a great time to invest as we just added this asset. If you missed our other webinars, we also have a property in the income fund in Macon, Georgia. And this property we really like. This is right off I-75. You can see the fast lanes there, and I'll talk about that. It also has a little bit of warehouse industrial element to it, as well as self-storage. It's about 66,000 square feet, and there's about 13,000 square feet of warehouse. We closed on this property back in late June, early July, and it's about 515 units, 79,000 square feet total when you can include the warehouse and the storage. And really what our plan is the seller had converted this warehouse space in the back to self-storage, and we're currently rounding up the lease up. But this facility over here, this warehouse to the north, is occupied by a lower paying tenant, and in our underwriting we just assume that tenant just stays there for 5 years. But here's the reality. We know that we can raise that tenant's rents up to market, or if that tenant jumps out, we can convert that warehouse space into twice as much square footage, leveraging the mezzanine level or the higher level, and we can get higher rents per square foot for self-storage, as the rents are about $15 to $16 in this market. So there's a huge value add potential there. This property also has economies of scale, as we have 3 facilities, I think, within a 20-minute drive time of Macon. So we can share payroll, share marketing. We have those efficiencies in the market. We're very familiar and have boots on the ground, which is fantastic. We love the traffic count visibility from the main road. A good traffic count for self-storage is about 25,000 cars a day. This facility has 80,000 cars. We're literally 3 times one would come to expect a proper visibility would mean, because you want customers to see your property, know where it is, and that drives your lease up. It's also right next to Mercer College, and it benefits from student population being so close, the closest facility to a university, to Mercer University, which is fantastic. Again, I showed the traffic count there. Macon's about 80,000, and again, an excellent rating would be about 25,000, because that's what really drives a lot of our customers. There is a ton of housing and resident or commercial development coming in right around the property, which is fantastic. There's a whole Macon area revitalization plan that's coming in. So that one is slated to deliver, I think, over the next 5 to 10 years. And then, our market rents right now for Macon surrounding our property are $16. However, when we bought this property, we're going and doing a heavy facelift. We're going in there, we're painting, we're fixing up units, we're repairing, repaving, restriping, we're cammering, we're doing all this stuff. And so to be conservative, we know that when there's friction on takeover, it takes a little while to get the right tenant in there that deals with the construction. And so we actually underwrote our rents going to $14.87. So I don't know how many times you've been on investment webinars that have underwritten declining rents, but that's actually what we've underwritten, is declining rents, to be conservative and for how much value we're generating this property. What's great is the property still cash flows despite those declining rents and despite the money that we planned for the improvements to the property. Speaking of which, this is how we've capitalized the asset. Again, we closed on this a few months ago. 55% leverage, very conservative, and a $7.3 million purchase price, representing a great value add. We have $23 a square foot in improvement costs, so similar to the other property, except this one's a little bit bigger. So we're carrying about $1.5 million to do that. And our break-even occupancy is a healthy 59%, with this property well up into the high 70s right now. Exit cap rate's a 6.35% assumption. And this is the debt that we actually achieved on the asset. So we already closed on these debt terms. We already have this loan. It's recorded on title, 6.5% interest rate with a 25-year amortization period and 55% leverage. So very conservative in that. So how do we mitigate risk on this investment? Well, first, we got a low risk, low break-even occupancy. We have a very strong capital improvements budget, conservative rent assumptions, and then we have an increasing cap rate assumption. So we are actually making the cap rate get worse to conservatively predict that maybe these values in the future will go down. So if you're concerned about markets going down or commercial real estate lowering, we've already baked that into this deal to project the returns. So really nice opportunity. That's all I'm going to really cover tonight. I do have a couple of questions in the queue that I want to answer. But I wanted to go deep into the properties, right? You're investing in a fund that buys, and it's probably going to buy between 8 and 10 properties like our previous funds. But I wanted to go deep into the story behind the properties that we're buying so that you can understand the business plan and there's full transparency to it. But if you have a question that I didn't answer or couldn't get to in time, send an email to ryan@spartan-investors.com, or if you look at the QR code on the screen, you can scan that and it will pop up a calendar and you can get on a call with one of our team members and we can walk through any questions that you have. Okay, first question I'll address, what about bonus depreciation, cost segregation? Great question, appreciate you writing that in. We are doing a full cost segregation study. It's already been kicked off for our Macon property. It will be kicked off for our Tyler property. That just means that we have an engineer come to the property and they will assess the depreciable components of the property, and that means the benefit of bonus depreciation and depreciation is given to the investors. So you can expect to have a depreciable loss this year for the 2023 tax return. So you have a loss on paper and cash in pocket, which is fantastic. The income fund, great question, plans to buy about 8 to 10 properties. We've revised our buying down a little bit for the income fund due to higher interest rates. So we're being conservative and making sure these higher interest rates work on some properties, and some of the bid-ask spread has been a little bit too wide to buy more facilities, but we're finding some really great opportunities in this market, especially buying at an 8% cap rate. Why is the seller selling? Great point. So the seller of Macon was just not a self-storage operator. They were focused on car washes and just really wasn't into self-storage. And so that represented an opportunity to get an off-market kind of pocket-listed property at a great price. Same goes for the Tyler asset. It was a local investment group that really wasn't focused on storage. And we have a really good name in Tyler, so we brought the opportunity as a pocket listing and got a great price on it. So two kind of similar scenarios in both markets. Great question. I talked about the cap rates, so I appreciate the question, but we addressed that earlier in the call. Feel free to email me though if you want to circle back to that. The minimum investment is $50K. Thanks for asking. And you do have to be an accredited investor to invest in our income fund. We do have investment opportunities for non-accredited investors from time to time. Just email us and we'll make sure that we've got you checked off on our list to receive those opportunities when they come up. Thanks for asking. Okay, well, I had a chance to answer a lot in the chat and a lot on the live here. So feel free to just email me if I didn't get to your question. Feel free to email me. I'm happy to answer it, turn around and answer super quick. Otherwise, this investment is open. It's on your dashboard. You can log in to IMS right from our website, Spartan-investors.com. Top right, you can see that there's an investment log in to our dashboard, and you can fill out, go into our deal room, see our opportunities, invest in the income fund. So thank you so much, everybody, for jumping on and having a chat about the income fund, and we'll catch up with you on the next update. Thanks, everybody.